Greetings everyone. In this video we will talk about assets. As per the definition of an asset, it's a resource bought, owned or controlled by the business which will provide a future economic benefit to business. Now there are points to note in this definition. It needs to be a resource owned or controlled by the business. It should provide some sort of future economic benefit. What it means by owned or controlled. If a business owns or controls an asset or a resource, it decides on its usage. It should be able to decide whether to use the asset in some particular way or sell the asset or dispose of the asset. Future in here means that more than 12 months. So assets or the resource should be able to be used for more than 12 months. And economic benefit means that it should help the business to make its profit in the future. There are two main types of assets, current assets and non-current assets, which are also called plant, property and equipment, or PPE in short. Current assets are the assets which we can quickly convert into cash. For example, bank deposit or shares or debtors. Non-current assets are the assets which are there and can be converted into cash, but not that quickly. For example, machines, land or buildings. You can get cash for them, but first you have to sell them. They are classified as non-current assets. There is another way of describing assets, tangible assets or intangible assets. Tangible assets are the assets with physical presence. You can see them, you can touch these assets. For example, building. Intangible assets are the assets which we cannot see, for example, goodwill or a software which is only in cloud and you actually cannot see it. Let's talk about definition of an asset in a little bit more detail. Asset is a resource which provide future economic benefit. Let's take an example of a lawn mowing business, and it bought a lawn mower as an asset. This machine is going to be used for next few years to do the work to get the money in. Think about it this way. We spend the money this year and the income will come over the next few years. It is logical to spread that spending over the next few years as well to match with the income it has been earning for the business or it will earn for the business. The way we do it for an asset is that we depreciate it over the life of the asset. In other words, that we spread the spending into depreciation expense over the next few years. Say for example, the lawn mower was going to last for 10 years. So every year 10% of its cost price will be coded into profit and loss statement, and the rest will sit in balance sheet as an asset. I hope it gives you a little bit more understanding about assets and where they are recorded in balance sheet. Thank you very much. Thank you for watching, and please subscribe for the channel to find more helpful videos like this.